Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello guys, my name is Kool-Aid Man 100X. Welcome to Black Money. How you guys doing? Black people, listen. I'm going to be doing a breakdown review of DoorDash. Now, y'all been waiting for this one. I've been waiting for it myself because I want to know why y'all keep stealing my food. So, man, we're going to be doing a full breakdown of DoorDash Inc. We're going to be looking under the hood at this company and see how it's ran and see where my money going. So, yeah, let's see if we want to invest in the Uber and see if we can get our money back some type of way. So you already know the first thing we like to do is see if this company is worth some bread. So we like to put in and see if we can get out. So let's check if DoorDash actually pay dividends. And as you can see, DoorDash does not pay any dividends to shareholders. They run the company inside. That's all. So we know Dash don't pay nothing. Which is kind of suspect, but you know, it is what it is. But let's see on the chart. So I like to break down my charts. I like to give you the 6 month, 1 year, 5 or max. So I pretty much display the way I do in case y'all like to watch my videos that way. So what we like to do is look at the 6 month, the 6 months. And they actually have key points where they actually drop. So they actually peak was like $200 a share, which I thought was really weird because how much disparity you get with DoorDash, I don't know how they reach almost over $200 a share. I don't even know how they reached that threshold of being around that 34. But the key moments when they dropped down to 161, which is crazy with a volume of 10 million people. Then on top of that, they was at 164, which is decent. But they actually took this uptick of 179, which is decent as well. So that's what's in the 6 month time frame. So let's look at the year. Let's look at the year. So when we look at the year, we got key points here. So the year, 196. So I actually took that dip for that 161 and they started being decent, jumping right back up to 179. With the volume being around 7 to 10 million, which is decent. So we're going to look at the 5 year. The 5 year, we actually want to explain this too, which I thought was kind of interesting because the peak here was 245, which I thought was crazy, by the way. They took that dip down to 107. Then they took another dip here from 74. Now, this was really tripped me out. They went from 74 to 62. Then you can get $62 a share with a volume of 38 million people that was really investing. So how did this drop to 62.99%? So crazy world. So we back up to 92% within that and they're starting to peak from there. But when you look at the max and you actually look at the full table of everything, it's actually going to give you a good table of that. They're in a negative 13%, which it took a hold on them. But I mean, you know, $13, that's pretty deep. And they had a share price of 150, which is not good for those key moments. So I mean, you can look at the company as, oh man, I'm investing in Dollar Tree, but $150 a share. No, they fall that low. That's a problem. They fail at 62 and they even went lower down to 48. How did this even happen? What was going on with DoorDash? I thought everybody was getting their food and they recommend a strong buy. How? For $150 a share and they don't pay dividends? You have to be losing before you're gaining. The best time to buy DoorDash was when it was at $43.06. That was your best time to buy DoorDash. After that, I will not touch this company. Only invest in it if it's in an ETF or anything else. But now, no, do not pay $150 for a share of DoorDash unless you're a big fan of them or want to invest in them as a, company that you prefer to pursue. Knock yourself out. But no, $150 a share. No, I think if you're investing $150 a share in a company, it better be the S&P 500 or any type of S&P or multiple companies in it, which is ETF, index funds and stuff like that. So you have to take that into account. But just for DoorDash, no. Don't do it. Don't ever do it. Don't do it. Look. All right. So let's jump under the hood and see where we actually coming from, which is the cash flow, which is crazy, by the way. So we're going to look at the net income, which is 285. They dropped down to 184 mil. Kind of bad, but I guess it works. The cash from operation. Why are y'all? Y'all cash operations is 504 mil. You jumped up to 871, 421, back to 5, over what you had in June 2025. It's an online base. You ain't nothing but substitute. You're not doing anything but substituting restaurants through an app. How do this conform with you putting that much money into operations? Everything is online. Everything's through a phone. I shouldn't keeping it up to date, but I don't know. That's weird to me. Cash from operations, garbage. Change of inventory. No change of inventory. Cash from investing. Oh my God. Y'all have none to invest in. Y'all started off with 900. Y'all was in the negative, so y'all have nothing. So you took that money out and put it in operations. I believe that we're going to get it down. We're going to find the truth, which I think was bogus. That's stupid if you think about it. From your cash from investing, your cash from financing. This is where it's going to get queried. Yep. 2.38 bill. And that's why you in the negative 100. So you had to pay what are y'all financing? It's an online business. How do you reach this number? I'm trying to figure that out. When y'all finance stuff, y'all know y'all got to pay them, right? And when you financing these things, it adds up. Y'all was at 2.38 bill for a company that's online based. I will never understand that. I will never understand it. So that is weird, I would say. Oh Lord, I'm afraid to look at this. Your free cash flow. You started off at negative 0.2. You're at 2 billion. I see why DoorDash is not functioning right. What are y'all doing with the money? How you have no cash flow? And you're an online based company that deals with all you're doing is just navigating food to other people. How are you 2 bill in the negative? Then the next year, you're negative 574 mil. Get back up to 4.2. You get 4.6. How you get more than what you started with? That's weird. And that was just through either pandemic or stuff like that, or workers or stuff like that. Now you at 4 point. Now your free cash flow is 436 mil. So it's the same as your leverage. Your leverage matches your free cash flow. You're not making no money. You're not making no money. You're not getting out of the negative of your debts because you got your cash operations, and your financing is horrible. You're in the billions in financing and you're still in the negative. That doesn't make any sense. So DoorDash, y'all want to pay 100. They're trying to up the price for the share to make up what they done lost in finance. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. And the operations and just to run the app in general. How is DoorDash staying afloat? And we know the cheating stuff that y'all do with this tipping stuff as well. So it's a lot of accusations about you DoorDash people up there is not really good. So we're taking that into account as well. So a lot of people is not really paying attention to that at all. So that's weird. Wow, this is just getting bad to worse, I would say. Okay. We're going to look at this a little bit more in depth, I say, because wow. I don't even know what to say. Let's go to the balance sheet. The balance sheet is the cash. Ooh, Lord. The balance sheet for the inventory. I have no inventory. The total assets. Current assets is, okay, 1.11 bill. I don't know what y'all investing in. I don't even know what the asset is. It has to be DoorDash in general. That's your asset. Your asset is you. So, I mean, that's the only way that evaluates to that. So, you got to take that into your current, assets. Prepaid expenses. Oh, Lord, I'm afraid to look at this. Let's take a look. I can't never find this because I'll be thinking they be hiding it from me. I really be thinking that sometimes. It be taking forever. Your plant, your shortcomings, your total assets. Here we go. Available taxes, prepaid expenses. Oof. Decent but high. That's too high. But God, how are y'all losing so much bread? And y'all $150 a share. That doesn't make any sense. That doesn't. And I see why. Look, the total current expenses, bro. How in the world? This is $2 billion. You're an online-based app that just navigates food. What is going on? I'm not understanding that, y'all. What? Huh? What are y'all doing with the money? Not making no sense. What? Your long-term, I'm afraid to look at the long-term assets 7. Yeah, y'all just evaluating your own company. Total assets. Y'all company is y'all asset. I ain't got nothing to say. Let's look at the earnings. Lord, I don't even know. Of course, y'all making good profit. I wouldn't advise that. You 4.3 billion, y'all making profit. So y'all earnings is great. Revenue is looking good. You took a couple hits, but that ain't really knocking y'all down. Y'all still made 4.3 billion. So, oh boy, I don't know. I really don't know. So let's look at the perplexity of the bullish and the bearish. The rapid category expands to raise opportunity complexity, pressure margins, executed adoption lag, more cost and analyzed model, tighter margins, and slower payoffs for the new vehicles and consistent warning that adding thousands of value-focused retail locations may increase costs faster than DoorDash. So what is DoorDash trying to expand to something? Like they're trying to become their own company. I'm thinking with DoorDash expansion into retail and groceries. Now this is where that's what I'm saying. To simplify by Dollar Tree rollouts across 9,000 stores and empower for the diversification strategy. And partner highlights the company to share restaurants, retail, grocery store with the organic growth, other volume 25%. So let me get this straight. So DoorDash trying to expand into having their own grocery store and stuff like that, have their own Dollar Tree and stuff. But the value of that is trying to expand it to be a Uber, a service, a market. Y'all doing too much stuff at once and y'all expenses and financing isn't getting too high. That's what I believe how this company works. That does not make sense. Y'all have too much stuff to volume up. How would you volume up? Y'all trying to do 10 things at once. Doesn't make any sense. I don't like that idea. So let's look at the consensus of it. The consensus, they say, is strong buy. Buy/strong buy approximately. Yeah. The bullish market. Yeah. So, I know where my money's going for DoorDash, and DoorDash is not a company I would invest in. ETF, yes, they too up and down. They're doing too many things at once to expand this company. It's too many hands in the pot, but nobody's actually shaping Nothing. So to invest in this company, I will go with an ETF or an index fund. To solely invest in this company by itself, paying $150 a share, no, because by the time you put that money in there, it's going to drop down. I'm telling you, man, it's going to drop, because if it can get to that $43 mark, boy, that whole $150 is gone, and you have to wait for it to peak. And hold on, this is here, so you have to wait till, and when was this? October 10th of 2025. So you have to wait, almost 2 to 3 years to see your profit actually come back, just holding DoorDash. So if this is a company you want to invest in, totally up to you. That's how you invest. But my observation, no, I would go with the ETF or index fund. But that's about it. I hope you enjoyed the video. I'm going to catch you guys on the next one.